International Relations of the Faculty of Economics. Today's opening address will be delivered by our keynote speaker, Professor Saeed Mubarak Al-Muharrami. We would like first to briefly introduce our distinguished keynote speaker. Professor Al-Muharrami serves as a professor in the Department of Economics and Finance at the College of Economics and Political Science, Sultan Qaboos University, where he is a leading expert in the fields of finance, banking, and monetary economics. Since January 2025, he has been serving as a member of the Board of Directors of the Central Bank of Oman. Prior to this appointment, he served as a member of Meclis el-Dawla, the State Council, the upper chamber of the Parliament of Oman, from November 1995 to October 2023. He has also previously held the position of Director of the Center for Human Sciences Research at Sultan Qaboos University and served as Dean of the College of Economics and Political Science from March 2014 to July 2017. Professor Al-Muharrami holds a bachelor degree in finance from the University of Arizona, United States, a Master of Business Administration from Origin State University, United States, and a Doctor of Philosophy in Finance and Banking from Cardiff University, United Kingdom. Throughout his distinguished career, Professor Al-Muharrami has been the recipient of numerous awards in recognition of his outstanding contributions to research, teaching, and academic leadership. It is now my great pleasure to invite Professor Al-Muharrami to the rostrum to deliver his address entitled Pegging GCC Currencies to the US Dollar, Stability Anchor or Strategic Constraint. The floor is yours, Professor.
Thank you very much. Bismillahirrahmanirrahim. Good morning, ladies and gentlemen. First of all, I would like to thank Professor Junaid and the college for inviting me as a keynote speaker, and hoping that I will be adding value to the conference. The invitation was very open. They didn't specify any kind of topic. Therefore, I thought maybe sharing with you an economic issue rather than being in the political science or international relations. So it is something related to economics, especially monetary policy within GCC, because the GCC countries, 5 of them, okay, Oman, Saudi Arabia, Qatar, UAE, and Bahrain, they are pegging their currencies to the US dollar for more than 4 decades. Kuwait, they are having a basket of currencies. And the question I would like also to share with you the answer. I want you to give up maybe by the end of my presentation. What is your opinion? Is the fixed peg of the currency of the GCC countries to the US dollar is the suitable one, the most appropriate for the GCC economies or not? And what if the GCC countries end the dollar? So this is not purely a monetary decision. It is also a geopolitical decision as well. Because I will go over this is the content. Begging is not a monetary policy in which there is some kind of requirement. Okay? The question is, can any country beg its currency? Yes, but there are some kind of requirement. What are the requirements for the GCC countries? First of all, the petrodollar. The petrodollar, they have to price and sell their petrol, the GCC, in dollars. Okay, this is the first requirement. The second, they have to have a good reserve. Okay? The third, they have to follow the Federal Reserve monetary policy. Okay, these are the 3 requirements. And therefore, in here you have to balance between giving up, basically you don't have an independent monetary policy, and between the stability. So we'll be going, I will be presenting, you know, the good thing in here that I'm presenting a lot of graphs, okay? For those who are not into economics, it's not that difficult because a lot of what I'm going to present, a lot of consists of graphs. I will go over the background and then what are the reasons for considering basket of currencies pegging instead of the US currency pegging. And then, of course, the justification for being or keeping the US peg as to the GCC currencies. And I will be presenting the three scenarios at the end, and finally the conclusion. So I will be going over the background. I will go over also the justification for pegging to basket of currencies. Then I will be going over justification for keeping the US pegging to the GCC currencies. And then I want you at least to answer, is it suitable to be in one or another? Okay? So over years, unfortunately in here, the pointer is working in here, but on the screen it's not. But over years, as you can see, these are three countries, and these are two countries, India, Oman, and Bahrain, okay, because their currency, Oman and Bahrain, is a bit in terms of their strength to the US dollar. It is about 0.38 something. So, but in here, it is around 3 point something. So 3, for example, Saudi riyals, it's written in here anyway. For example, 3.75 Saudi riyal to $1. And that is, in here, the graph is showing from 1990s. But actually, it is almost more than 5 decades right now. Okay? And it's stable. Is that a benefit to the GCC countries? Yes. Had the GCC countries benefit from the bid to the US dollar? Yes. Had the US benefited from the, its currency back to the GCC countries? The answer is yes. Okay, we'll be going over this. So the good thing, and those maybe who are living in Oman, Professor Junaid was living in Oman, noticing that, there is no problem of the exchange, or there is no problem with the inflation, generally speaking, okay? And therefore, this is a good thing, The bank has provided stability for 4 decades. In fact, it's more than 4 decades. This is also a background. Begging, it has an implication. It has an implication that you have to give up your monetary policy. The monetary policy may be done by the Federal Reserve on your behalf. So as a country, you don't have some kind of sovereign monetary policy, okay? The decision is taken by the Federal Reserve and you have to follow. So this is the weakness, okay? And as you can see in here, the rates, whenever we are talking about the rates, we are talking about the deposit interest rate. This is the Fed. These days, it was in 28 June of 26, so it is 3.75, and the GCC almost very close. So they are going along that rate. It will not be acceptable, for example, to have like 7% or 8% or 1%. So it has to be within acceptable range. So this is one of the bad thing about begging. Why? Because you have to follow whatever decided by the Federal Reserve. Sometimes you are having a problem locally with your economy. Maybe they are having a recession. You are having a boom. So the treatment is different. Okay? I will be going over that also some other slides. Of course, there are benefits of pegging to the US dollars. The stability is very important. Yeah. Whether you are working, you will not be concerned about the value of money. Inflation, we'll be seeing a graph after a while. Greater financial market confidence, everybody is confident about the currency, or these currencies, that the value of these currencies are stable. Therefore, there is more confidence in that. Strong external credibility. And also for the countries, the GCC countries, they can predict the oil revenues. Okay? So there is no, the exchange issue. And overall, the financial stability in the GCC economies. So overall, these are the benefits. Why is it important also for the US, especially when it comes to the GCC countries? Why is it important that the US dollar is big, or the GCC are taking their currencies to the US dollar? There are many benefits to stay global demand for the US dollar. Oil export revenues recycled into US dollar assets. And we'll be seeing that after a while. We'll be seeing a slide that the GCC country, they are recycling whatever revenues and they are investing in the US. Okay, in treasury bills, for example. Strong demand for US treasury securities, reinforcement of the US dollars reserve currency dominance, and also we'll be seeing that in graph, deepening GCC US financial independence. The most important thing for the US, that the Fed creates stable monetary corridor, linking the revenues of the hydrocarbon to the US financial markets. So, yeah, it is also, there are benefits to the US as well. These are some values that the US are benefiting from, its currency by the GCC currencies. For example, in here, the foreign reserves and the central banks, okay, its range is about from 400 to 640 billion US dollar. So it means that there is more and more demand and reserve in the GCC central banks. Also, GCC countries invested in the US treasury securities more than 313 billion US dollars. On top of that, the sovereign wealth funds of the GCC invested a range of, approximately between a range from 1.5 to 3.0 trillion US dollars. So they are also a kind of benefit to the US. So we are talking about a range of 2.2 to 4.0 trillion, a total either demand or investment of the GCC in the US currency and the economy. Cost of bringing to the US dollar, of course you are importing the US monetary policy, okay? This is one of the weaknesses. Limited independent monetary policy. Therefore, it is not your decision. You have to follow. Interest rate misalignment, exposure to the US inflation dynamics. Sometimes you don't need to increase the interest rate, but you have to follow. The Fed decided to increase the interest rate, and therefore you will be increasing the interest rate. That will create some kind of and you are importing also US inflation dynamics. And a limited response to domestic economic cycles. You are having your own cycles, which is different from the economic cycle of the US. Yet, you cannot do anything about it. Okay? So this is also the cost of the, and over here is in here the graph from 2005 to 2025. US, you can see the rates follow the federal cycle. This is the Federal Reserve and the GCC. Okay, they are moving exactly the same over 20 years or more. Okay, so this is a background so far, giving you a background. Okay, so why we are concerned if there is a good news for the GCC countries, and it's a good news for the US. What is the issue? The first issue is the China issue. China right now is the largest trading partner for the Gulf country. We'll be seeing a graph after a while. Who are the partners for the GCC countries? Trading partners. China also the largest oil exporter from the Gulf countries. Okay? And therefore, if we are concerned about selling in another currencies, in fact, it's not the US. It is the China which is buying most of the oil imported from the Gulf countries. And also right now, there is a discussion regarding the Iran dominating oil transactions, okay? This is one reason. Another is that the dominance of oil trade over years is decreasing. As you can see, in 2000, it's very close to 100%, but in 24, you can say it's 88%. Therefore, also, the reason here to consider, for example, begging to basket of currencies, because the fact is that the dominance of oil trade in US dollar is decreasing over years. Another issue also is the China GCC trade is growing over years for the same period, from 20 to 24, as you can see. There is a growth, there is an increase, there is an expansion of the trade in a China GCC trade, whatever, commodities and so on. And in fact, we are seeing more and more of Chinese products, especially in the last, I would say, the last maybe 8 years, including cars. We are seeing more and more, for example, Chinese cars. And they are very competitive, especially when it comes to pricing. And this will be given. We are expecting that also the growth will continue. Okay. Who are the trading partners? The trading partners is, number one, is not the US. Number one is China. Second is India. Third is Japan. United States comes fourth. Okay? So in terms of the trading partner, our trading partners are not European countries or the US. It is actually Asian countries. And also we are maybe within 5 years time we'll be seeing the United States maybe number 6 or number 7. No? Okay, so we are ending the justification for basket of currencies. We talk about the other one, which is the justification to keep the US dollar as a big currency. And there are 3 pillars. There are 3 things that the country should adhere to. First one, the oil price should be in US dollar, and that's done, actually. The GCC are selling their oil in US dollar, which is also good for them, okay? Second is the monetary policy synchronization, which means that you have to follow the Federal Reserve and the GCC country following. And the third one is that you have to have a good foreign reserve buffer. And usually the measurement in central banks to say whether the country is having a good reserve or not, they are measured this way. They will be saying, what is the total reserve in central bank? And how long will it be enough to cover imports, assuming that there will be no revenues for coming months? Is it 3 months? Is it? So the reasonable will be at least like 8 months. Okay, that you should have a reserve at the central bank covering your imports for 8 months. That would be considered, you are having a good reserve. Okay, another reason for keeping the peg to the US dollar is that the GCC countries are still dependent in hydrocarbon. So this graph is showing that the countries, all the 6 countries, dependent in their revenues, in fact, even much more than, maybe 85%. But overall, maybe Bahrain is 60%, but all of them is above that. So in terms of the revenue of the governments, they are still dependent in oil, which is priced in US dollars. The good thing also, about making the currency break to the US dollar, that even in the worst cases, for example, during COVID or different periods, the rate is stable, regardless of what's happening, whether it is financial, economic issues, the exchange is remaining the same. The good thing also, that another justification why the GCC should keep the US dollar is that the inflation, I mentioned that, but this is the inflation. I'm sure it's different from Turkey. In here, in Oman, for example, they are saying it is 1%. But even the worst scenario, it will be like 3% in Oman. So we are not noticing that increase in prices. So this is also a good justification or the argument that GCC countries should remain with the same regime. The good thing also, whenever we're talking about the inflation, the dollar, if it's getting strong compared to other currencies, then you will be having an advantage. You will be importing this inflation, okay? But on the other hand, and this is rarely is happening, if it's weakening, then you will be importing inflation, okay? So overall, linking your currency to US, you are having an advantage of importing this inflation, okay? The good thing also, or the justification for to keep the US dollar, is that the reserve in central banks, global, most currencies are in US dollar, about 57%. So globally, all central banks, they are maintaining about 57% of the reserve, whatever reserve, different currencies in US dollar. Of course, then euro, then other currencies. So this is also another justification is to keep the existing regime. India also, the GCC countries managed to have a good reserve. And the exchange rate stability index is 0 because there is no fluctuation. It is 0 over time. Even though we said that who are the partners, GCC partners, trading partners, and we said mainly they are Asian countries. But the payment, global payment, still in US dollar. 50.5% of the global payment in US dollar, regardless who's your partner. Yeah, you will be dealing with India, for example, or Korea, or Japan, but most probably the payment will be in US dollar. Yeah, this is also trade. The trade, generally speaking, 75% linked to the US dollar. So that giving the dominance of the US dollar over other currencies. I was also checking what is happening these days during the crisis after February 27 of this year, during the war. What is happening to the value of the US dollar? In fact, it is increasing. So even in the crisis, the world still buying US dollars. Okay, still. So the BRICS becomes more valuable, and the dollar liquidity dominates alternatives. Not only that, but also recently, investors, foreign investors, for example, bought 198 billion treasury bills. Okay? And over the 12 months, they bought about 587 billion. And it is not for short term, it is for long term. So that indicates that investors, they have the confidence on the economy and in the currency of the US, still, even under the worst conditions. Okay? And therefore, giving these facts from pro and cons, what would be your recommendation? Okay, what would be your recommendation? I will leave it to you. You might be saying one or another. But okay, I'll be giving you these scenarios. You will be saying I'm making three scenarios. The first scenario is to continue with the US dollar. Another scenario, follow Kuwait. Kuwait is having a basket of currencies, but unfortunately still following also the Federal Reserve in terms of the monetary policy. But the second scenario is having a basket of BRIC and try to be independent in your monetary policy. And the third scenario, of course, is to having your common currency. And to be frank with you, having a common currency, especially these days, is not possible. But why not think about it in the future? So I'm putting in here three scenarios. And I would say these are the advantages and disadvantages of each. But I will be coming into a conclusion, because also to adhere to the time, that the US bank remains the most appropriate medium term. I would say my recommendation is, at least for short term and the medium term, the GCC countries should continue bringing their currencies to the US dollar. But for the medium term, they should think about the basket of currencies. They should not be limited. It could be more weight of US dollar. It could be maybe 70–60% weight of the US dollar. But in here, you are trying to be independent, considering also your economic conditions, because in many cases, and this is, by the way, is happening actually, sometimes you are in recession and they are involved. They are making some kind of decisions to increase the interest rate. You don't want to increase the interest rate. In fact, you want to decrease the interest rate. So you are in a dilemma. Should you follow them, even though the economic cycle is totally different, and this is, by going for basket of currency, you are trying to have your independent monetary policy. Overall, and of course for the common currency, it's a long-term strategic vision. The GCC countries should think about their own common currency. But overall, I would say This is my recommendation. What will be your recommendation? Thank you very much.
Then was there a question and answer? Okay.
We extend our sincere gratitude to Professor Al-Muharrami for his truly enlightening address. It is now my honor to invite our distinguished dean, Professor Mahmoud Cüneyt Yenigün, to the rostrum to present Professor Al-Muharrami with a certificate of appreciation and the commemorative plaque on behalf of our institution.
I would like to ask another question from political perspective. That's why
I'm ready to answer.
you are the keynote speaker. You are unquestionable. I want to know the background. Also, this is saying here, Ali, which is enemy. Okay, thank you very much. You don't need the certificate, but this is an appreciation.
Thank you very much.
You don't need certificate after now. You need certificate from your side. Thank you. As a thank you. Thank you. Thank you very much. Yeah, put them in. Okay, thank you. Thank you. Tutabiliyorsun canların yok değil mi?
Is there any answers and questions for,
No?
it's up to you. It's up to you.
Are you sure? Normally, keynote speakers do not take actually the questions, as you know, because it is Joanne's style. If you would like to,
I'll be happy to.
so Saeed Mubarak always actually humble, and he will be very happy actually to answer you if you would like to have some political economical side actually questions. As you know, yesterday we have given actually keynote speech actually about the politics and international relations. Today's economic and finance way. So political economy is a kind of perfect junction actually to be answered with a very deep expert, which was recognized by the United Nations. Professor Saeed is here actually to answer to you. So, would you like to have one of that?
Yeah, sure.
Thank you very much for your presentation. I want to ask you a simple and basic question that, you have summarized the economic and financial side of US Gulf or GCC integration in economic and financial terms. What is the price tag for this policy in the political, social, and regional settings? That means, your presentation sounded to me that we can talk about, currency pegging of this American states, from Texas to New York, or from California to the southern states, including southern states too, because it is very basic that, those states are part of the United States. But I see, and many people also see, that Gulf countries pay a big price for this in terms of political turmoils, that they play almost no role in settling the problems, from Palestine to Lebanon to wherever we go, to Iran. This is the question I want to ask you. Thank you.
Thank you. Yeah, that's more of a political issue. I'm not expert in political issues. But first of all, I present my presentation from the economic perspective, not from the political perspective. What is the price? The price, I think, the main price, of course, is that the GCC countries they have to price and sell their oil or hydrocarbon in US dollar. So this is like a mutual agreement between the two parties that the GCC countries will be selling their hydrocarbon in US dollar. So the GCC countries, they are supporting the US dollar as well, okay, by this kind of arrangement. On the other hand, the GCC countries also, they benefited. So I'm talking about political, not political, economical benefits. Both parties are benefiting from each another. Regarding political, I don't know, I mean, there are officials within countries and they are, at least we are academics, we are a bit free to say whatever we want. We are not politicians. But I think, I totally agree with my government because the role of Omani government is a bit different in terms of expressing its position in some of the issues, whether it is Palestine issue, whether it is from, from the Iran issue. So, I don't want to talk about the other countries, but I'm talking about the Omani position in terms of the political position is a good representation, at least for myself, as an individual. Okay? But I don't like to go into the other countries because they will be having their own justification. Dr. Sumaya?
Morning. Thank you so much for this wonderful communication and presentation. I enjoyed a lot, Professor Saeed. Actually, I want to ask you about something that is I'm wondering a lot about it, which is nowadays we are speaking about the Venezuelan reserve of petrol, and it's under the hand of US. Today I was following the news and I was listening to the last declaration of US President Trump. He said that the ships are just stuck in the Hormuz outlet are now have a queue to US in order to import oil. I think it's not the US oil, but it's the Venezuelan oil. So which impact nowadays on GCC countries' oil exportations that is related to this political issue, which is the Iran-Israeli-US war and its repercussions through also the US benefits from the Venezuelan petrol.
Of course, what is happening, definitely, countries like Kuwait, Qatar, Bahrain, to some extent UAE, they and also Saudi Arabia, they were affected by exporting their oil. Okay. Of course, for Saudi, they are having some kind of another way. For UAE, also some kind of 1.5 billion barrel a day through Algeria. So also they are having some kind of another way. But definitely the GCC, as long as the Strait of Hormuz is having a problem, they will be having a problem in exporting their crude oil. But as you can see, it's not only the GCC, it's many countries, especially maybe it is affecting mainly Asian countries, because Asian countries are more dependent on the GCC oil, and it is affecting them a lot. So it's not only the GCC. The GCC, they will be having a good reserve, let's say.
a good reserve. Even for 1 year, they will not be having a problem. But other countries, they will be having a problem. Let's hope that the problem will be solved. Inshallah, soon. Inshallah. Yes.
Dilara Murcu from Faculty of Economics. I'm a professor. I would like to ask you whether the GCC countries have the freedom not to peg their currencies to US because you have well explained about the consequences of this pegging issue. Their economies are not similar to US economy. But as far as I know, this is a decision taken by both sides. So do they have the freedom to go out of this and have, for example, their trade relationships more with China, which you have shown us among the scenarios? So this is my question. Thank you very much.
Thank you, Professor. Do they have the decision? The answer is yes. For example, Kuwait in 2007 decided that to be, having a basket of currencies, of course, with mainly US dollar, dominated by US dollar, but it is having a basket of currencies. But up to now also, they are following the Federal Reserve. You know why? Because also for the stability of money, of the cash within countries. So assuming, for example, that Kuwait decided not to increase the interest rate. The Fed decided to increase the interest rate. The other 5 countries increases accordingly. Kuwait decided not. In this situation, what will happen? The cash will be moving out of Kuwait because depositors, I'm not talking about small depositors, those who are having millions, they will be seeking a higher return. So they will be transferring their funds, their money, to, for example, Oman, to UAE, to Qatar, and so on, for a higher return. Then Kuwait will be having an issue, a problem. And that's why, even though Kuwait is having a basket of currency, still, because of this issue, is following the Federal Reserve rate. But going back, in short, are they having that capacity to change? Yes. But up to now, they are seeing, their benefits and costs. The cost is that you are giving up your decision, but in return you are getting so many kind of advantages, and they are considering that the advantages overweigh the disadvantage or the cost.
Unfortunately, cost is hard.
But also, to be frank with you, the GCC consider right now they are also monetary. And they are making ready, internally, they are making ready. In one day, maybe they will be having a basket of currency. So everything is possible. Make it an easy one.
Thank you very much, Professor Saeed, for your insightful presentation. I'm Sanjay Beck from Sultan Qaboos University. My question is this, countries having the IMF loan program are conditioned to the floating exchange rate. Some of the countries in GCC are actually under the IMF loan program. Did IMF condition these countries to the floating exchange rates? Why or why not?
I would say, I don't know about the fact that any of the GCC are having a loan from IMF. Oman definitely is not having a loan from IMF. Oman case, why I'm saying about Oman? Because it is one of the worst, it was one of the worst. The sovereign debt was reaching almost 70%. It was 68% of the GDP. But
they managed to reduce it 34%. But none of the loan from Oman and also from other GCC, for example, Pakistan, yes. Okay, I'm saying Pakistan because you are from Pakistan, yes, they are having loan from the IMF. And the condition in this case, for example, Egypt, they are having a loan from IMF. And in this case, there is a condition that the currency should be afloat. But for the GCC, they are not. And they are very solid in terms of they are having good reserve. Their loan is not that high. Even Oman, but they are overall, they are having good reserve.
Thank you, Professor.
Yeah. Thank you very much. Thank you. Thank you.
Our distinguished participants, the keynote session has now closed. The remaining session of the day will commence following a 10-minute coffee break. Thank you very much.